If you are a limited company business owner and want to know more about corporation tax, then this is the video for you. And make sure that you stay tuned right till the end, because I'll even give you some tips on how to reduce your corporation tax bill. As an accountant supporting lots of small business owners, we specifically work with small UK limited companies. But if you are an owner-managed UK business, then don't forget to hit the subscribe button so that you can get loads of helpful tips just like this that will help you to run your business. So let's start by looking at what exactly is corporation tax. Well, in the UK, when you're a limited company, you are your own legal entity. And just like individuals like me and you, limited companies have to pay tax too. And that is exactly what corporation tax is. It's a tax levied on the profits of limited companies. Now, every company must submit a company tax return, and this is also known as a CT 600. And the CT 600 is in addition to submitting your annual company accounts. So every limited company has a set of accounts and a tax return, also known as a CT 600. Now, it's important to mention that the profit that's shown in your accounts is not normally the same as your taxable profit. The numbers can be quite similar, or they can be quite wildly different depending on your business. But when we're talking about corporation tax, we generally refer to your taxable profit, which is not always the same as the profit in your accounts. So when do you have to pay corporation tax? And because HMRC like to make things super complicated, the deadline for filing your tax return is different to the deadline for paying the corporation tax. But because we're proactive accountants, to keep things super simple, we like to take the earliest of those dates, which is 9 months and 1 day after your year end. Now, over 50% of limited companies have a year end of either December or March. So if your year end is December, then that means that you need to pay your corporation tax to HMRC by the 1st of October. And if your year end is March, you need to pay the corporation tax by the 1st of January. And how much corporation tax do you have to pay? Well, that entirely depends on the government policy and what's written into legislation. Now, up until March 23, we had in the UK one standard flat rate of corporation tax for all businesses of 19%. But from the 1st of April 23, that changed, and we have returned to the older method of 2 different rates of corporation tax. You have the rate that small businesses pay, and you have what's known as the main rate. And the small business rate is 19% and the main rate is 25%. So what that means in practice is that if your taxable profits are less than £50,000, you pay a flat rate of 19% on all of your taxable profit. If your business makes profits between £50,000 and £250,000, then you pay what's known as the marginal rate. And when your profits go over £250,000, then you just pay the flat rate of 25% on all of your profits. Now, I know that a lot of you watching this will fall into that 50 to 250k category and will be quite confused by what exactly the marginal rate is. But the calculation for this is actually super simple. All you need to do is take your profits up to 50,000 and times it by 19% tax. Then for any profits that fall between 50 to 250k, you actually pay 26.5% tax. Now, I know what you're thinking, 26.5% is higher than the highest rate of 25%. But when you blend that 26.5 with the 19%, then you actually end up with this tapered effect where the more profit you make, the higher percentage you pay. But the maximum rate that you will ever pay will be 25%. And how do you pay corporation tax to HMRC? Well, normally once you've filed your tax return with them, they will send to you a statement which tells you how much you have to pay, when you have to pay it by, and will also include a 17-digit reference that is unique to your company and per year. You can also find this statement online as well if you have a HMRC account. To pay HMRC, I wouldn't recommend using the direct debit method. And the reason for this is that you actually have to set up this direct debit every year and change the reference. So the direct debit doesn't really bring any benefits to it. So therefore, I always recommend either paying it by bank transfer or go onto your online account and you can make a payment via debit or credit card or even directly from your banking app. If for whatever reason you can't find the 17-digit reference number, then still make sure that you make the payment to HMRC on time. My recommendation would be to use your UTR instead. This is your unique tax reference or your corporation tax number, and you should be able to find this either on your online account, on any paperwork that you've got from HMRC, or on the top of your tax return. Now, the only thing to bear in mind if you do not use the correct reference is that HMRC are receiving literally thousands upon thousands of payments into their bank every day. So their system will automatically look for that 17-digit reference and allocate it to the correct business and to the correct tax year. So if you don't use that 17-digit reference and you use the UTR number instead, HMRC will be able to identify what company it's for, but they may not allocate it to the correct tax year. So whilst as long as you pay HMRC on time, you won't receive any penalties or interest, it does mean that you're quite likely to receive a letter in the post saying that you haven't paid the corporation tax, and they'll say that they're going to fine you or charge you interest. And that then means that often you have to pick up the phone to HMRC and spend hours of your time on hold on their rubbish online telephone systems trying to resolve the issue. And what happens if you can't pay HMRC on time? Well, firstly, I would always suggest that you are working with a proactive accountant. That means that throughout the year, they should be giving you regular estimates of what they think your year-end tax liability is going to be, and they should be supporting you with cash flow forecasting so that you don't have any nasty surprises and that you have enough cash to pay your bills. But if you do find yourself in a sticky situation, then HMRC offer what's known as a time to pay arrangement. And what a time to pay arrangement is that it is an agreement with HMRC that you will pay them normally instalments over a 12-month period. Now, HMRC do charge interest to you when you use a time to pay, but they charge a fixed rate of 2.5% plus the base rate. And this is actually quite commercially competitive if you were to look at getting an external financing loan or maybe an overdraft or something instead to pay HMRC. So a time to pay arrangement can be a really cost-effective and easy way to deal with a tax liability if you don't have the cash to pay it right now. What I would say is that always contact HMRC if you have any issues at all in paying or you think you will have any issues. You can get a time to pay arrangement agreed with them and then not use it, and you won't get charged any interest. But if you don't let HMRC know that you're not going to be paying your tax bill on time, then they will fine you and automatically charge you interest. And how can you reduce your corporation tax bill and pay as little tax as possible? Well, firstly, even though I am an accountant, I am a big advocate of paying the taxes that are fair and due. The reality is that the government have many tax specialists working for them whose job is to close tax loopholes that allow individuals or businesses to have an unfair tax advantage over others. That means that there aren't that many ways that you can legitimately reduce your tax bill. So I am a massive advocate for encouraging business owners to focus on growing their business and increasing their profits rather than worrying about how they reduce their tax bill. Nonetheless, there are still a few things that you can do. Now, the first thing is to check out this video. I'll put a link up the top and in the comments below. It goes through everything that you need to know about the annual investment allowance. And whilst overall, over a period of normally 5 years, you'll end up paying the same tax, it does mean that you can reduce this year's tax bill down to zero. Secondly, my tip is to keep good records. Especially with a lot of small businesses, the lines between business cash and personal cash can be quite blurred. Often you might use cash out of your own pocket or even your own personal credit or debit cards to pay for things, particularly online subscriptions. But making sure that you are regularly on top of all of your receipts and that you are keeping a receipt or log of every transaction that goes out of your personal bank as well as your business bank. And if you're ever in doubt whether you can reclaim some of the things that are paid with your personal credit or debit card, just speak to your accountant and they'll be able to advise you. Thirdly, one of the most powerful changes that a business can make is to ensure that they are using a proactive accountant. Your accountant should be suggesting ways that you can reduce your tax bill. They should be asking you questions about possible expenses that you could be putting through your business that are likely for your business of your industry or type to incur. If you've got an accountant that is just simply taking all of the information that you send and replying with a tax return, then this is probably not a proactive accountant, and it's likely that they might be missing some expenses from your accounts and therefore you're paying more tax than you need to. And finally, a lot of the onus falls on small business owners like us to increase our knowledge around these areas. Now, as I say, I'm a big advocate for, as a small business owner, your focus being on growing your business and your profits and managing your business successfully, not worrying about becoming a tax expert. But you do need enough basic knowledge to be able to challenge your accountant, whether that's an external accountant or somebody working in your business for you. So don't forget to hit the subscribe button and you can start building your knowledge around business finances and taxes right away.